going on, guys? It's K-Dub here with another episode of Crypto Zombie. So today is Sunday. Hope you're having an awesome day wherever you are. Welcome back to the channel. Obviously, it is always a pleasure to have you here. Let's have a look at what's going on in the charts. Well, Bitcoin is down 1.2% today. Well, why is this? Well, we've actually been putting in a bit of a sideways movement. We've been doing this Bart Simpson pattern for quite some time. In fact, we jokingly were saying that this is probably what Bitcoin is going to do. And that's what Bitcoin's actually doing. Strange how that works, isn't it? Well, let's dive in. Let's have a look. So you see, we did have the pullback. Now, yesterday we were talking about similarities between Bitcoin and gold fractals. We were talking about a potential death cross. The death cross showed up. We had the jump and we pulled back, pretty much showing exactly what happened on the gold chart. But we're not going to talk about that today because why talk about the short term when the long term is so much more fun, especially considering the price of Bitcoin in the future. Potentially. Now, I've seen a lot of videos coming out recently talking about a $10 million Bitcoin, right? It all started with this one video that came out, and then there were a few others that followed. Then you had some analysts looking into it. I really haven't talked about a number that large on the channel, so I thought today would be an awesome time, considering that we're just sitting here watching the chart go sideways, to discuss what is going on. Now, let's give the markets a quick refresh anyway, since we're here. Let's check it out live. We're down about $1 billion, Bitcoin down 0.81%, still holding strong, 65.3% Bitcoin dominance on CoinMarketCap. Icon is up 14% today. We also have Tezos, Hypercash, Nano, Hedge Trade, IOST, Quant, Next, Bytecoin, Leo, XMAX. There's some others as well. Not a bad day for crypto. Moving on over to here, you are noticing though, however, we are seeing some strong sells on some of the exchanges right now, and it looks like the longs have fallen victim to the shorts, up currently at 51.35%. Now, having a look at what is going on here, yesterday we were talking about this critical zone that we were in. Bitcoin had a move. It had maybe it wasn't a massive move according to some of you, but for Bitcoin, we at the time came from around, it was about a 6% pump, and currently we are being stomped out again by the line. Once again, if you're looking at this giant triangle, which only really had 2 points of contact, well, then that would bring us all the way out to the end of this year. So we may have a long period of consolidation ahead of us. However, this smaller triangle right here shows that we are having difficulty breaking out of this resistance. So what does that mean? Well, we had the death cross yesterday. We were sitting above the 21 exponential moving average this morning. However, we have fallen below it. This was to be expected. That's what the death cross does, right? So, moving on, having a look, you can see right here, we are still in this downwards channel. Now, I wouldn't be surprised if we did have a pump to retest this resistance of this channel. However, the trend currently is moving downwards. If you actually look, instead of putting in an ascending broadening wedge, we're actually putting in a descending broadening wedge, which clearly is bearish. And we are potentially heading towards this $8,000 level if we look at this line we've been looking at. So we may go down to 8,200, 8,300. Now, talking about this comparison to the gold chart yesterday, you could see right here, this was the gold chart. So we had an M shape, right? It went up, down, up, down. We had a mini rally. Then we fell below support, or the support that was holding gold. Finally, we got basically, we stomped out on this resistance of this previous wedge consolidation pattern. Going back to what Bitcoin is doing right now, the question is, are we going to have that third touch right here before coming down and retesting? Because don't forget, gold actually touched 1, 2, 3 times. Okay, it came down and then we finally blasted through. So going back over to Bitcoin, we've only touched twice. So do we need to touch this trend one more time before that confirmation? Well, you guys let me know, but currently it looks like the pattern is playing out, but we're not here to talk about that today. So we know we still need to close the CME futures gaps at around $8,500 if you think that's something that we need to actually do. And having a look at all of our different levels we've been speaking about multiple times, the next one on the chart would be around 9,800, followed by 9,200, any lower 8,700, and then we would close the gap at 8,500. The resistance to break out of is 11,000, followed by 11,700. 12,700, and then the sky is the limit, my friends. But we are not here to talk about technical analysis today. Well, you know what? Let's entertain it, because I'm just a guy on the internet. Why listen to me, right? Let's talk about what Tone Vase has said. Oh, wait. Anyway, if this breaks to the upside, he says there's absolutely nothing on a weekly chart that is acting as resistance, and then it's very likely that Bitcoin will accelerate to the upside into the halving. There could also be an additional catalyst to Bitcoin if Bitcoin starts to rise again faster than the shitcoins, which it probably will. There will be additional exodus of shitcoins into Bitcoin. He's still looking for an 80% correction. However, he says we may not see it until a $40,000 Bitcoin, and if we were to have it, well, you can do the math from there. So, let's talk about this $10 million Bitcoin. Well, you have the co-founder of Bill Fodl, Colin Auttles. Now, he's come out recently and agreed that a $10 million Bitcoin is possible in the future, not tomorrow, maybe not in the next 10 years, but eventually. He says it is to act only as digital gold, is it? Well, if that is the case, then if successful, based on today's price, right? If all 21 million Bitcoin were to be mined, there should be about $378,000 price point per Bitcoin, right? He says if you think Bitcoin should become the world's primary reserve currency, as he does, then one Bitcoin should be worth about $10 million. Now let's dive into this and let's have a look. We need to start with a little bit of information before we just start throwing around these crazy numbers, right? Well, let's talk about the report that was very recently published by the Foundation for Defense of Democracies, better known as the FDD. They say the golden age of the US dollar may be coming to a close. The world's reserve currency has now a competitor that looks extremely attractive to Iran, China, Venezuela, and Russia. And we're talking about digital currencies, which we've noticed have been pretty damn good at successfully circumventing these sanctions. Moving on, the U.S. position of influence is not necessarily permanent. In fact, no fiat currency has really ever survived. Ever. You can look at the history books. Technology has created a potential pathway to alternative financial value transfer systems outside of U.S. control. The target timeline may be 2 to 3 decades, but these actors are developing the building blocks now. They envision a world in which cryptocurrency technology helps them eclipse U.S. financial power, much the way that the dollar once eclipsed the British pound. Now, let's talk about Bitcoin. Let's see how Bitcoin has progressed so far. Well, one thing you can talk about is the fact that 100 Satoshis, or a millionth of a Bitcoin, is now back to being worth about a penny, or roughly 1.1 cent, maybe a little bit less right now. Bitcoin seems like it's going down currently. So what does this mean? Well, for 10 Satoshis to be worth a penny, the price of Bitcoin would have to be at $100,000 per coin, which I believe is very possible. In fact, I think we're going to see a $100,000 Bitcoin by the end of the next cycle. I do. I think within the next 2 years, we will have a $100,000 Bitcoin. But that's just my opinion. Don't listen to me. Always do your own research, right? So that would give it a market cap of about 2 trillion, translating to circa 10% of gold's market cap. But that's not enough. We need to be 100% of gold's and beyond. So where stocks are concerned, Bitcoin's $2 trillion market cap would be just 2% of the global stocks market cap, which currently stands at around 100 trillion. But that is still not enough. The value of all real estate and land is probably immeasurable in dollars, but it would probably be far more than $100 trillion, right? So let's have a look. And this is what I wanted to talk about. Now, this guy, James Bullard, president of the Federal Reserve Bank of St. Louis. So I would assume he would be on the side of the US dollar, right? He stated that currencies are intrinsically worthless. That's right. He says they're worthless and they're fragile. And this comes just days after Donald Trump's tweet saying that, essentially they're printed out of thin air. Well, he says, for my purposes, currency is an intrinsically worthless object and has value in equilibrium only because others expect to accept it in exchange. Now, we know currently that the dollar is not backed by anything. We've been off the gold standard since the 70s. So when I hand you a dollar, why do you accept it? You accept it because you trust that it has value, right? I believe it has value. You believe it has value. So we just say it does. But does it? That's the question. Well, scrolling down here, you could see historically, the profusion of privately issued currency created an unsatisfactory system, according to him. In the 1830s, 90% of U.S. money supply was privately issued banknotes, right? Contemporaries didn't like this system. Currencies traded at different rates at all different times in different places. There were discount books in each town to keep track of how much each currency should be discounted. Kind of reminds us a lot of exchanges today, right? Well, you can find these different prices, right? Arbitrage opportunities. Well, that's not what we're talking about. We're discussing this, and he says there was a call for a uniform currency, which was implemented during the Civil War. Not going to go into that, but if you're a fan of history, you know what I'm talking about. So he's right. this system was undesirable, right? But not because there were many currencies, but because each of them was just badly mismanaged, right? So the only difference from the old local bank money to the current one is that while previously banks could go under and thus could be punished for mismanaging their money, now all banks are guaranteed by the good old taxpayer, right? Just look at 2008 financial crisis, right? Trillions were extended to the banks, leading in a great part to the ridiculously high debt levels that we pretty much have today. The US government is now paying around $500 billion a year in interest payments. $500 billion, guys. Bitcoin's current market cap isn't even 200 billion. Let that sink in. So the old system was not reformed in any substantial manner, but only superficially. Now, in case you forgot what we're talking about, this is James Bullard, president of the Federal Reserve Bank of St. Louis. Let's continue. Scrolling down here, you can see that gold, right? Actually, let's talk about gold. Let's talk about gold because that is a store of value, correct? Well, the government had to name the exchange rate between notes and gold, and governments sometimes altered this rate. So here's a difference right out the gate. With Bitcoin, you can't alter the rate. You could fork Bitcoin, right? You can make Bitcoin Cash, Bitcoin SV, Bitcoin Diamond, Bitcoin whatever you want, but you're still going to always have that original Bitcoin chain, correct? So the main problem for Bitcoin isn't really that, it's more that you don't want to spend the Bitcoin, right? Now, what is this referred to? Why would we choose to hodl the Bitcoin and spend the dollars? Well, this comes down to something known as Gresham's law, and this basically says that given the opportunity between spending two different currencies or assets or whatever that will be accepted at the exact same rate, you will spend the one that you think has less intrinsic value. Just makes sense, right? But don't listen to me. Let's turn it over to this person over at 1 Minute Crypto and let them tell you exactly what is going on.
Let's assume you have two coins, a silver one and one made of less valuable copper. Furthermore, legal tender laws state that they have the same value and merchants are forced to accept both. We'll also assume you're hungry and, coincidentally, a loaf of bread costs exactly one coin. Which of the two coins will you use to pay the baker? Gresham's law, named after Sir Thomas Gresham, basically tells us that bad money drives out good, or in other words, that of course you'll want to keep the more valuable silver coin and use the copper one. Since other people will do the same, silver coins will eventually no longer circulate because everyone will just hang on to them. However, this only happens when the state is able to enforce legal tender laws. If those don't exist or people are no longer willing to follow them, Gresham's law can operate in reverse, with good money driving out bad money because merchants will only accept payment methods they consider valuable. This reverse of Gresham's law is called Thiers' law in honor of Adolphe Thiers and can be observed in situations such as citizens of Eastern European countries after the Soviet bloc collapsed using dollars instead of their volatile currencies, or similar situations in, let's say, South America where legal tender laws are either non-existent or they exist, but, well, people don't care.
So the moral of this video is basically given the option between using $5 worth of Bitcoin to buy something versus a $5 bill or a piece of paper, well, one would most likely choose the piece of paper, right? Because Bitcoin has a more intrinsic value, which is why we hold Bitcoin and spend dollars. However, the second part of this video discusses the opposite of it, which is where we now no longer accept it. Or let's say the government says, no, we want to confiscate it, or we want to take this, or we want to accept it, or even look what they just did with gold. Does anybody remember when people were forced to turn over their gold? You had to turn over your gold or else you would be basically jailed. Yes, that is also in the history books. So that is just one reason, but let's have a look at gold, right? Gold's a great store of value, right? Bitcoin will never outperform gold because gold can actually be used in electronics. It could be used in jewelry, right? Well, sure, it can, but there's an interesting paradox with that. If the price of gold was to get extremely expensive and skyrocket through the roof, well, then I would think that these electronic companies would find alternatives to gold because let's be honest, Apple, Samsung, these guys want to make the absolute most amount of money with the minimum amount to invest into the products. And if the price of gold is 10x what it used to be a year ago, well, they're probably going to look for something else. That's number one. Number two, this is gold mine production in metric tons. And you could see since the 1900s, it has been increasing and increasing and increasing and increasing. This is the absolute opposite of Bitcoin mining, where we have the halvening event, where we actually cut the supply in half. Not the supply totally, but the rate at which it is distributed, right? Also, let's not mention the fact that there might just be some asteroid out in space that's made of gold, but even if that's just a bunch of hocus pocus and it's all fake and it's just whatever, then what about the gold at the bottom of the ocean, right? We haven't been able to get that yet. We don't know how to, but maybe one day we will. And if we figure out how to actually start mining the gold that's at the bottom of the ocean, well, then that would also affect the supply of gold, right? Whereas Bitcoin will always be 21 million. And I'm not even going to get into the dollar, which has lost over, 95% of its purchasing power. And that was back in 2013. I would assume at this point we're pretty much upwards around 99%. I mean, here's the thing. Hold the dollar, you're guaranteed to lose 3%, maybe 2%, in some really bad cases, 5% annually. So that's just something, and that's guaranteed. So yeah, you might be gambling with Bitcoin, but you're guaranteed to lose money holding the dollar. Now, let's have a look at all the money in the world. This is one of my favorite charts, right? Now you can see right here, this is cryptocurrency. This little guy right here is Bitcoin. Now, at the time of making this, Bitcoin was 100 billion. We're currently around 180 billion, although we are falling currently as I'm making this video. So let's just say that it was double this, okay? Let's just say instead of one little square, let's say it's two. Okay, not really going to make that much of a difference on the charts, but just to entertain those that love to pick those numbers. Now let's scroll down and have a look. Well, clearly you could see California's GDP, Fed sheet balance, currency, gold, stock markets, global money supply, global debt, don't even get me started, global real estate, we have emerging markets, derivatives. When does it end, guys? Oh, wait, hold on. Yeah, that's Bitcoin. Right there. So, we definitely have a long way to go, and we certainly could overtake all of this, but is that realistic? Well, there's a video, and this video is called $10 million Bitcoin Endgame. It's by Token Vision, one of the best videos I've pretty much ever watched in my entire life, and I really think you should definitely watch this, guys, because considering how much money there is in the world, and considering how small Bitcoin currently is right now, and considering the fact that no fiat system has ever lasted, and considering the fact that we're definitely going into debt, and you have seen people moving and hedging into Bitcoin, you've seen other countries, OTC, just spiking and exploding through the roof. Well, I guess you guys could basically see that a $10 million Bitcoin, although currently maybe does seem out of reach, don't forget the fact that fiat currencies are losing value every single day. So, I mean, hypothetically, Bitcoin could probably just sit there and do nothing, right? And we could just watch the dollar devalue, or it could just do it on its own, right? So that's something to consider, guys.
For we meet in an hour of change and challenge, in a decade of hope and fear. For the eyes of the world now look into space, to the moon, and to the planets beyond. We have had our failures, but so have others, even if they do not admit them. To be sure, we are behind, and will be behind for some time. But we do not intend to stay behind, and in this decade we shall make up and move ahead. But why, some say, the moon? Why choose this as our goal? We choose to go to the moon. We choose to go to the moon. We choose to go to the moon in this decade and do the other things. Not because they are easy, but because they are hard. Because that goal will serve to organize and measure the best of our energies and skills. Because that challenge is one that we're willing to accept, one we are unwilling to postpone, and one we intend to win. The great British explorer George Mallory, who was to die on Mount Everest, was asked why did he want to climb it. He said, because it is there. Well, space is there, and we're going to climb it. And the moon and the planets are there, and new hopes for knowledge and peace are there. And therefore, as we set sail, we ask God's blessing on the most hazardous and dangerous and greatest adventure on which man has ever embarked.
So, that being said, I wanted to say, that is my point, but also, guys, let's be real, no one's going to even use Libra when it comes out. CNBC's Power Lunch team recently broke down the Treasury Secretary Steven Mnuchin's comments on Facebook, and analyst Brent Thill said that out of the 600 US Facebook users surveyed, 80% said they would never use Libra, which means 20% are considering it, but realistically, are you going to use Libra? Are you? Are you going to use Libra? Let me know in the description below. Getting on to some news before we go, Steve Wasniak, the co-founder of Apple, is reportedly developing a new blockchain-based startup in Malta. Wasniak's new venture called eForce, not sure how to pronounce it, will focus on making energy consumption more efficient and transparent, saving money and doing good for the environment. And finally, BitMEX. Look at this. It turns out there were $85 million that left BitMEX yesterday and only $12 million that went in. Why is this happening? Well, there was a big scare. CFTC's looking in. You know, they are allowing Americans to use the platform, whatever. There's also allegations that they might be trading against their users. That's possible, guys. We'll have to see how that rolls out. But until then, you guys know I use ByBit. That's my go-to. That is what I use. I've had nothing but a great experience with it. Download a VPN. If you don't want to, don't. Dollar cost average. Everyone is entitled to their own opinion, and you can do whatever you want. No one's forcing you to use anything, but if you're interested, I did a review tutorial popping up above. More than welcome to use it.